There's a difference between a pre-qualification, a pre-approval, and a underwritten pre-approval, right? A pre-qualification, you're not running your credit.
Okay.
You're telling the lender your financial picture. I have a 700 credit score. I make 500,000 a year. I have this much debt, and then the lender will say, "Okay, based off everything you told me, congratulations, you are pre-qualified." That is trash. Do not get pre-qualified. So you know when you get those offers in the mail, like a credit card offer, and they be like, "Congratulations, you've been pre-qualified for a line, credit card of $50,000."
Yeah.
Right? And then they have a QR code, or you scan it, or you go to the special website, and you go to apply now. And then when you apply, womp, womp, womp,
You don't get
you
approved.
don't get approved, or you get like $5.
So what are they looking at then? How do they know how to send it to you?
Because now you putting in your information, right? It's just these computer systems algorithms come up and they just send the
They just
offers
send it
out. And again, it's a hit or miss strategy with the credit cards, right? And to get people to apply, you give them a big number. People need money.
Right.
So they apply and it's hit or miss. It's a numbers game. But I'm just giving that as an example, right? That's a pre-qualification. Now, a pre-approval is when you're actually submitting your documentation to the lender. They're running your credit. The loan officer is reviewing everything. They're running it hopefully through the AUS system, which is the automated underwriting system. And then it would come up approved eligible, hopefully,
Right.
which means you're approved or pre-approved. And the loan officer will now send you a letter that says, "Congratulations, you've been pre-approved. Go out and shop for a mortgage." Now, if that loan officer is good at what they do, let's hope they are, that letter could be good, right? But a pre-approval letter is good, but it's still not worth the paper it's printed on. You want to know why?
Yeah, I was gonna say, why is that if you already have?
Who can make an approval decision on behalf of the bank? That's my question to you in the audience.
The underwriter.
Class is in session.
I mean, the underwriter. I'm
Correct.
Yeah. I mean, that's something I always hear, because I think I kind of asked this question a while ago.
Correct.
Right.
You're absolutely right. So if a loan officer gives you a pre-approval letter,
Right.
is that a commitment from the bank to lend to you? Yes or no?
No, because the underwriter has the final. I don't want to say final say so, but
Yes,
they look
they
at
do.
your.
They have the final
They
say-so.
do, but they're the ones who are actually really looking into things, I guess.
The underwriter is the only one who can make an decline decision
Right.
on behalf of a bank.
Behalf of a bank.
on
There's no
behalf.
emotion there, but there's no what now when it comes to that. There's no like emotionals. It's more of like
It's
you
black
don't
and
have
white.
enough.
It's black and
Okay.
white. You either approved or declined,
Okay.
right? So when a loan officer gives you a pre-approval letter, that's not a commitment to lend. That is the loan officer saying, based off of their opinion of
Right.
what they reviewed and how they calculated your income, you are pre-approved for X, Y, and Z. Go out there and shop with confidence. But there have been many situations when that buyer now gets into contract and they submit the loan into underwriting, and then they get declined because maybe the loan officer either A, didn't do calculations properly, which
Okay.
happens all the time, or B, the borrower didn't disclose stuff and it came up while it was in underwriting. Because remember, when you go through underwriting, it's like they're doing a whole background check on you to make sure you are worthy of getting this loan.
Is that per product though,
That's per.
or just overall for
That's
a loan
overall.
general?
Period. Underwrite. We're underwriting you.
Yeah.
You know
right.
what I'm saying?
Okay.
We're doing our due diligence to see if I give you $500K, you can pay my ass back.
Right.
It's underwrite.
Yeah.
Right. Now, the third option is a pre-underwritten pre-approval letter. That's when now the loan officer does the job that they did. They run credit, review your documents, submit to AUS, the automated underwriting system. They issue you a pre-approval letter, but now they package that file up as if it's a deal that's in contract. And the address would be like a TBD address, right? To be
Okay.
determined. And then once you have that, you submit that to the underwriting department, and now the underwriter will review that loan as if it's in contract. And then they will make a underwriting decision, approve or declined.
Right.
Right? And hopefully it gets approved, and they'll issue what's called a commitment letter or a conditional approval letter or commitment letter.
Right.
Now, on this conditional approval letter, it's a pre-approval, but now it has a couple more pages, and it tells us, the loan officer and the buyer, exactly what's needed to close the loan. 3 things that will be up there automatically will be a signed executed contract of sale, an appraisal report for the property, and a title report for the property, and amongst other things too. So the underwriter now looks at your financial picture and they say, hey, I might need a level explanation for something. I might need updated pay stubs. I might want to question the deposit in your bank statement, whatever it is, right? All of that will be on the letter. So now you as the buyer, as you're out here shopping for your house, you can now on the back end work on your conditions that's needed. So now when you find your house and you get into contract, you can go ahead now and submit that contract along with all the conditions that the underwriter wants.
Right.
And now you submit everything at the same time. Now, obviously, you ain't going to have appraisal and title yet,
Right.
but you'll have at least the executed contract of sale, and you have all the buyer conditions. Now, once you submit that into underwriter, now that initial review, they're going to now be able to clear those conditions if you met what they wanted. So now once they reapprove the loan, because it now has a property address, and they reapprove it, and now you have a commitment letter, it's a clean commitment, and you don't have 100 things that you need to do. So in turn, this will help you close so much faster
and smoother
if you do your process and your underwrite up front, which applywithmg.com, my team offers this.
So why would a loan officer tell you to go out and shop for a house if they don't have the
Because you're
underwritten?
pre-approved. Like, see, I'm a great loan officer, and my team is great. So when we write a pre-approval letter, we are pre-underwriting ourselves because we know what the hell we're doing, right? So we'll pre-underwrite, send you on your way, because you don't want to submit all pre-approvals into underwriting, because now you can back up the underwriting department with a bunch of pre-approvals that's never going to close.
So the fact that you're knowledgeable on this is what makes you know, like, okay, this is gonna probably, you'll be all right.
You'll be all right.
Okay.
You A paper, you got
Right.
good down payment, low debt to income ratio, solid job. Yeah, we can submit you to underwriter and get you the commitment just so you have more negotiating power.
Right.
Absolutely. But in some cases, it's, for me and my team, it's case by case. We're not going to, especially we get a lot of inquiries. So we're not going to submit everybody through this process unless we know, look, you're looking to close on something within the next 4 months.
Right.
Because a pre-approval letter, a commitment letter, is only good for 4 months. Because once your credit expires, you have to rerun your credit.
Yeah.
You have to not go through the process again, but if your credit drops, then that could be subject to change your entire approval.
Okay, so like, let's say all that's good, and then you go through the process, and then you're about to close, but then you go and buy like furniture before, like, or you don't, you know what I'm saying? Like how?
But then you played yourself. You shouldn't be buying anything before you close on the house, because now, especially if you have limited money, you're using your money that you're going to close on a house to buy furniture, or you're going to open up new credit and debt. Now that has to go into your debt to income ratio. So rule number 1, don't buy nothing, man. Wait till you close. You don't even own the house yet. First of all, why are you buying furniture if you don't even own the house?
I don't know. Some people, I mean, I've heard these stories before, so that's what I'm asking.
That's what I'm telling you guys. Don't buy shit until you close, because you don't own the house. You know how many people have purchased all types of furniture, did all this stuff, and then the loan winds up getting declined. I've had people quit their jobs because they were closing that week and they hated their job, so they fired their job. But we do a verification of employment the day of closing.
Damn. So you disclose this before,
Of
obviously.
course, you have to, because people do people shit. People do people shit, yo, all the time. They be peopling. And it's like, oh my God, what are you doing, people? People be peopling.
Crazy.
No, this happens every day, man.